My name's Seamus Donoghue. I'm responsible for business development and sales at Metaco. I'll give you a brief introduction of the company. We're based in Switzerland. This is pretty much the view we normally have from the Lausanne office, but unfortunately, none of us are in the Lausanne office right now. We're all working from home. Company is set up in 2015, and we launched our main product, which was Silo in 2018. And basically, we're a technology company, purely a technology company. We don't get involved in any sort of regulated activity to compete with our clients. And our focus has really been around building institutional solutions for digital assets focused on the banking sector, so they can incorporate these assets into their core infrastructure. So Silo, which we call now a digital operating system for digital assets, or rather an operating system for digital assets, was launched in 2018. And that also coincided with our backing with a number of institutional partners in Switzerland, some of the largest core banking providers, ICTs, and banks in Switzerland. I think one of the things that's unique about our positioning now is that we have a fairly long track record in the space. We work with a number of global clients, as I mentioned, primarily banks. So in Switzerland, one of the first crypto banks to launch FINMA regulated was Signum, is using our infrastructure. Solaris Bank, in the context of Germany, Solaris and Börse Stuttgart, two of the leaders in launching regulated custodians, have built that infrastructure on Silo. Gazprom Bank, one of the first banks in Switzerland in terms of private banks, also launched our solution. We have a number of other banks, MAS regulated, FINMA regulated, that are using our infrastructure. I think one of the narratives we take away is we work with all types of banks now. I think it was private banks to start with. We work with infrastructure banks, such as Solaris or API banks. We work with the global custodian out of Asia, out of Singapore, and we work with a large retail bank out of Asia as well. And importantly, we also work with their infrastructure providers, Avaloq and Custodigit. Avaloq being a core banking provider, and Custodigit, a subsidiary of Swisscom, which provides regulated key management service. Both have modules, both have built their infrastructure on Silo. So what is it? Basically, it is obviously a starting point is custody. So we have a end-to-end wallet management system. We offer a connected infrastructure to start with. So you basically can run all the various temperatures of hot to warm. That's been designed obviously to be very flexible and highly scalable, built to banks' requirements. We also offer an extension of a disconnected cold module. So basically clients can implement basically their own operational and physical security and have a fully disconnected cold storage solution as well. We're agnostic to ledger. We'll support both permissioned and public ledgers. Typically the banks we work with have all focused on their business case being around public ledgers, but they all look at permission ledgers. At least that's their business case, that's where the bigger opportunity be as markets get tokenized, markets such as securities markets get tokenized. So we support both. Importantly as well, we also have an integrated smart contract manager. Currently supporting EVM. We have modules for the things like ERC20 tokens, so you can securely manage all the, let's say, tokenization processes like minting, burning, and managing the full life cycle of a tokenized asset as well. We work with our clients in terms of deployment as well, so whatever they need, we can potentially support, although given we largely deal with large institutions, most of the implementations have been on-premise. Tying all this together and why we talk about it as an operating system is really what we have is a programmable entitlement system. So this can be deployed basically, you can use it as a web application rather, you can access it, but typically most of our clients integrate it, so we have APIs, and we bring to it a whole ecosystem of partners that are integrated as well. And the one thing that's key about how you interact with these partners and how you interact with the keys themselves. So obviously, as everybody knows in this space, keeping keys safe is one element, but really the governance of those keys is equally important. Otherwise, you just have the APIs and steal all the funds. And then any interaction with a third party also, that authorization process or how that process is authorized is important. And what we found is working with banks is typically the governance in crypto is fairly primitive. I mean, just a multi-sig is interesting, but doesn't really fit into a bank's regulatory risk and compliance framework. So with our clients, we built this a programmable entitlement system. So any workflow they have, whether it's authorizing a transaction, may have multiple steps, different groups, maybe some other logic built into those rules, we can support around the authorization process for a transaction, or even basically an authorization for interaction with the core banking, integrating the KYC, AML, third-party services. interacting with a sub-custodian, or interacting with a settlement network. All of these can be programmed to the bank's requirements. We support multi-tenancy as well. And I think the key point is the bank is able to delegate that same sort of entitlements to their sub-clients. So this is a very flexible framework for the banks and their clients. Deployment has been a big factor. We've been focused on tier 1, tier 2 firms, and for them, they really want to control all the infrastructure. So by default, most of our implementations have been on-premise, meaning the bank manages all the infrastructure. We deploy the hardware, given we're a hardware-based security. We're a software company. We partner with third-party hardware providers. That hardware, which comes integrated with our software, is deployed in the client premises, and they will manage it. We will obviously train them, and it comes with the full backend, meaning indexers, nodes, and databases, and fully managed by the client. But obviously, not all clients are the same, and there's a lot smaller clients that may not want to manage their own infrastructure. We have various options there that we can provide, either a hybrid where they manage the hardware and externalize the non-critical components, or we have partners such as Avaloq, Custodigit, and soon others to be announced that can provide a fully managed service for the client as well. So they just manage the authorizations. Integrating and implementation are big issues. Typically, banks don't necessarily know how to start. We have some partners that can consult on that, whether it's a security perspective or best practices, firms like Kudelski or KPMG. And we obviously work with implementation partners as well, given implementation is a big issue for banks.
The time the segments are up yet, so please come to an end.
Okay, yep, and everything fully documented API, and we have a full demo in the cloud for clients that want to use it. So that's obviously available and will be dialed up in a day. Any more information, please reach out. Happy to connect. And just to mention, we're very committed to the German market, and there will be some more announcements to follow soon. Thank you very much.
Thanks for the presentation. Wonderful. All right, next up is Tangany. Julian?
Am I out of the screen yet?
Yes, you are. Now we can see you, and now Julian. Yeah.
So can you hear me?
Yes.
Can you see also my presentation? Yes. Okay, very good. So
all right, 7 minutes. Yeah, I'll show you like this if you have one left.
Okay. Good morning. Thank you for joining me here today. My name is Julian Richter. I'm head of sales and business development at Tangany, your reliable white label blockchain custodian for digital assets based in Germany. The next 7 minutes, I will tell you a little bit more about our company, products and visions, and how you can participate from our all-in-one API solution. First of all, I want to give you the information why we founded Tangany and what we believe in. First, we believe in the disruptive potential of blockchain and DLT technology and its advantages. Moreover, we believe in the simplicity when it comes to products. So sorry, now it's working. We believe in the simplicity when it comes to products. Products should be easy to use and easy to integrate. Moreover, we think that you as a business should focus 100% on your clients, on your business, and on building amazing products. You should not struggle with the complexity of blockchain. Tangany will handle the complexity of blockchain for you. This is the problem what we solve. Some more facts about Tangany. We were founded in 2018 from tech and cybersecurity experts. We are based in Munich, and we do the whole development in-house because we think that the safekeeping of private keys is a very sensitive topic. Our team is growing on a rapidly basis. We have 14 employees, 40% software engineers. So you see that tech is our focus. We are regulated at the moment under the AMLD5. We have the temporary license, and we are applying for the permanent license at the moment. We have more than 19,000 wallets under custody, and we are growing on a weekly basis, and more than 20 active clients. I will show you on another slide more about that. More information about investors, partners, and associations. We did our successfully seed round in February this year. We are very proud that the High Tech Gründerfonds is our lead investor. And moreover, we work with Microsoft for startups very closely. We are very active in the blockchain associations. I want to name a few: NATBA, Blockchain Bundesverband, BlockRocket, and ITSA. Please check them out. They have great use cases. Our CEO, Marty Greitmeier, is also official controller at the Bundesblock. Moreover, we have a close relationship or partnership with Picus Network. They will present later on here as well. Our product is a wallet as a service solution, one unified platform to securely store digital assets and to seamlessly integrate blockchain into legacy and new systems. We reduce the implementation and maintaining costs through a smart API platform. Moreover, we provide API data seamlessly integrable into any application. All private keys are safely stored within our custody cloud HSM solution. That means every customer gets his own key vault. We don't mix data here. In the end, it's a warm wallet solution. So you have the advantage of the accessibility anytime and combined with the HSM and high secure key vault solution. On the diagram, you see we are the middle layer between the complexity of blockchain and your customer application. You have two choices to use the Tangany product. On the one hand, you can use our smart API easily to be integrated in the infrastructure and is running in your backend. On the other hand, we have a new product. It's a white label online wallet. We launched it in April this month, and you can have your own logo, your own CI colors, and you are the face to your customer. It's an easy to use product, and yeah, it's our new wallet solution where you are the face to your customer. 6 USPs about Tangany and our product. You can have it 100% white label. We handle the storage of the private keys for you for different digital assets. We run the whole infrastructure. That means we run the nodes. We communicate with the blockchain, and we handle the whole complexity with blockchain. Our HSM solution is cloud-based. With that, we have a high scalability, and you can create as many wallets as you want. Also, our solution is easy to integrate it into your system. Your developers will love our solution. We are regulated under the crypto custody license at the moment. And I want to also give you an extract of disclosed clients. Sorry. Our latest clients is Agora Innovation, a tokenization platform, and Ride Capital. They are focused on asset management and real estate. So you see a lot of clients are attracted by our use case. So I will come to an end. If you are looking for a reliable solution for your blockchain use case, Tangany is the right solution for you. So thank you very much. And I'd like to answer your questions afterwards in the WhatsApp group if you want. Thank you.
Wonderful. Thanks a lot, Julian. Now we will have Martin from Upvest.
Screen?
All right. Yes, 7 minutes. Let's go.
All right, give me a second. Hi, my name is Martin. I'm the CEO and founder of Upvest, and we create a securities API. Some quick words about us. So we are excited about building the infrastructure 2.0 for securities. That includes the issuance, the custody, but also the clearing of it. We raised over 10 million from venture capital funds like Notion Capital, Holdspring Ventures, and Partech. 25 employees and have around 50 million AUM. We increased our team, so we have people from Klarna, TransferWise, Onfido, Accenture, Goldman Sachs, and so on. So a pretty broad set of fintech experts that actually have done it before and that actually will do it again in this realm as well. In terms of our customers, so we are mostly focused on fintechs, and we call them also neo-brokers. So our clients include neo-brokers like Bitwala, but also asset tokenization platforms like Exporo, Brickblock, and also Wikifolio. We have around 50 million AUM. This is still increasing during Corona, although not as fast as we originally expected, but we think we will hit the 300 million AUM this year, also including new products on the settlement layer. But I think what's more important actually also as a message for the audience is that we think there is a big paradigm shift happening. And we see specifically in the neo brokerage. So if you look at traditional neo brokers like Trade Republic, Raise, and Scalable, they raise massive amounts of money. If you go to asset tokenization platforms and crypto platforms, they also grow at an unparalleled pace. And you look at neobanks, for instance, you also see that they go into the brokerage business. And lastly, you have big tech companies like Uber, Facebook, and Google that also move into fintech. For instance, at Uber, it's possible to also automatically invest into your retirement funds. So overall, we think actually neo brokers on the rise, and actually it will grow massively in the next 5 to 10 years, similar to the neo banking and happened before. But if you then look at the infrastructure for neo brokerage, you actually see that there are certain limitations on the custody. So it's very hard when you think about Scalable. Scalable is mostly in Germany. When you think about and Trade Republic is also not international. If you think about Bucks, it's also not international. If you think about Wikifolio, it's not really international. And one of the reasons is that custody is not harmonized across Europe. So one of the big advantages putting now custody on the blockchain is that you can go across borders, which makes the internationalization for these players much easier. The second one is actually that the limited asset variety. So for instance, if you want to offer crypto, you actually have to work with a separated crypto custodian and have to add this to a platform. But actually like a Trade Republic or all the other platforms want to have one solution for all. The same goes for fractional ownership of real estate, for instance, with our partner Exporo. And thirdly, when you actually work with these partners, like for instance, traditional banks, they ask for 40, 50 basis points per retail client per year, which is too high actually looking at the margins that you can make. And this also reduces their overall growth potential. So what Upvest actually is doing, it's a simple API that helps these neo brokers to scale internationally. So it's built on blockchain, so this way it doesn't have any borders. It's also regulated by the BaFin, similar to the other players that were mentioned here. It has an asset depth, so we have private market assets, like for instance, real estate investments, crypto, but also derivatives on public market assets with our partner Wikifolio. What is important for our clients, it's not just a contractual work, it's also a reliable API with 99% availability. So you can just plug it into your existing workflows, into your existing products, and you can also include this into your data warehouse if you actually need the data for compliance. So this is the full stack that we offer. It's issuance, custody, and settlement. The issuance we do with partners like Define and Tangany. The custody part we build entirely ourselves internally. We also include things like fees, data management, which are incredibly important when you work with regulated entities. And soon we also start the secondary market with Exporo, where we go into a settlement of assets. So pretty much swapping security tokens for fiat as a new product. On the asset side, we support real estate, derivatives with Wikifolio, and crypto with, for instance, Bitwala. Licensed, so we also got grandfathered. We teamed up our team, so we have now 6 people in our compliance team. So head of compliance, AML, will be also one of the companies that get the first crypto custody license and banking grade security. It's fully documented, open source on our platform, so you can check it out thereafter. And the most important, actually, when we started the business is actually fintechs of tomorrow, they build APIs. And our API is completely public. All of our products are completely public. This gives actually a good start for any developer to play around with, but also certain trust. And our goal is that we actually can plug in any solution that we have, like for instance, the wallet management, but also complex transactions where you can interact with smart contracts programmatically with less than 5 lines of code. Something that we get really, really excited right now is to pipe between the different fintechs that we support. So on the right-hand side, this is kind of our goal. It's an API. It's not just the custody. It's actually that you as a fintech and neo broker, you can onboard up to 300,000 securities into your platform. And this is pretty much connected to our Rails, which is kind of like a new clearing on the blockchain and works between the different apps. So for instance, if you're now a neo broker and you would like to offer a meta bond that Exporo just created, you can just plug this in with our API and connect to this. The other way around works as well. So if you, for instance, like an issuer, you can also pipe your tokens to the other players that we are connected to. So we get incredibly excited actually about building this network for fintechs and the neo brokers of tomorrow. and to make it available via a simple API that is also reliable. So if you're on the issuance side, or if you actually get excited about piping these assets, reach out to us anytime, and you can send me an email thereafter. Thank you.
Wonderful. Thanks a lot. Just in time. That's pretty good. All right. Next up is Sebastian from Riddle Code. All right, Sebastian.
Good morning. Good morning, everybody. My name is Sebastian Becker. I'm the Chief Commercial Officer of Riddle Code, and I'd like to guide you through our custodial approach. So first, what we are trying as a company for a couple of years now is to bring trust to the token economy in general. Our founder and CTO, Professor Fürstner, has been part of that cypherpunk group that received the Satoshi Nakamoto paper in 2008. So he has been there from the beginning, and he's really an expert in all things crypto and related. If you could move to the next slide, please, Jan.
Yeah.
So what is our goal and also the distinctive technology that we are building? We want to create a superior platform for the tokenized economy. So custody for us is not only related to crypto assets, but also to tokenization on a broader scale. And the end goal of the company is to become the leading global digital underwriter. That includes, machines or IoT devices also signing data and value transactions coming from them as a trusted data source. Next slide. We all know that there's a big opportunity in the digital crypto asset space. So we believe that a relevant part of the global economy will be stored and transacted via tokens. But of course, there's still a lot of complexity. And we still think that this market at a relatively early stage is not leveraging all of the opportunities in the market. So there's complexity around processes, around sustainable products and services, and of course, how to create IDs and how to handle the key management. This new infrastructure is coming under more and more regulatory supervision. So pressure is maybe a bit exaggerated here. We think it's a very positive thing that regulation is now coming into place. So we are trying to do our best to be part of that, let's say, solutions that are out there. And we're also following the standardization efforts by many players, because that's, of course, also still lacking in the market. Next slide. From our viewpoint, a future-proof digital asset custody has to be, because of the early stage of the market, secure, compliant, and still flexible. And I will quickly try to explain to you how we tackle these three areas. Next slide. So we really worry about critical infrastructure. So security for us is really key. And we use several, let's say, best of breed technology aspects and modules to make our platform most secure. So we use multi-party computation, for example, for transaction signing, but we are fully aware of the limits of that technology as well. That's also one of the reasons why we've built and designed our own crypto chips. We've built our own hardware custodial wallets. So in order to enable cryptographically secured communication and also policy execution, we will always rely on a combination of hardware and software. This enables an end-to-end security approach for our customers that is also fully embracing decentralization, meaning decentralization of open source code, peer reviews in that area, and of course the overall technical architecture. Next slide. With regards to compliance, we've built together or as part of a foundation, the IPDB Foundation, our own metadata blockchain after taking over the BigChainDB project. So we used this to create full audit trails to enable a more efficient reconciliation and settlement. The policy layer that we provide is, of course, also including features such as role-based access. We are helping regulators or our clients to build fully regulatory compliant approval flows and also the audit trails. And of course, we offer segregated custodial wallets. With this, we have enabled our client in Switzerland, Falcon Bank, to become the first FINMA accepted custody provider. And we've developed our solution together with and successfully implemented it at regulated financial institutions. Some of them, unfortunately, we can't name. And of course, we integrate with the leading AML solution providers and enable all the communication around these AML procedures. Next slide. With regards to flexibility, both on the hardware and also on the software side, we provide various multi-signature schemes. We've heard about some of the shortcomings of multi-sig as well, but we found very elegant ways to enable it for basically all assets. We also allow manual and automated transaction signing, and we have a lot of algorithmic flexibility so that we can support and onboard all assets quickly using the same infrastructure and without the need for further hardware. This includes also the integration of APIs towards legacy technology as well, and some of the other features that basically result in unlimited and secure wallet creation and management from one platform. And that's why we also stretch beyond the banking sector. So we enable tokenization on a broad base of in-house design crypto chips and tags, so that we can also support the tokenization of physical assets and link it to the transaction and custodial platforms. Next slide.
Yeah, last minute.
So these are just some examples from what our customers say. I'm sure the slides are distributed, so you can read through that afterwards. And the last aspect that I wanted to raise is that we don't stop at custody. Next slide, please. I've related to the metadata blockchain that we have created. So we use it to enhance throughput. We're up to 23,000 transactions and hashes per second. We offer identities based on hardware for machines and sensor devices for IoT and industrial use cases. We fully integrated the Liquid network so that we can, issue tokens in an unseen, let's say, performance and interoperability environment. And we will take our hardware wallet platform also to the cloud, so we can offer a hardware or HSM as a service in the cloud in the next 6 to 12 months. So that's the way forward from our point of view. And we're happy to take your questions and get in touch.
Nice, thanks a lot. Can I just share this PDF in the group chat then?
Sure.
Yeah, okay.
Yes.
All right, wonderful. If you have any questions, just write them in the chat and Sebastian will answer. And now our last company is Simon from DECUS Network.
Good morning, ladies and gentlemen. I'm very happy today to represent DECUS Network and to talk to you about the future of decentralized custody. My name is Simon Peters and I'm the Managing Director of the DECUS Network. And if you like what I'm going to say, I'm very happy to answer you any questions afterwards in the WhatsApp group or just drop me an email. And who are we? First of all, we are a group of companies actually. So DECUS Network is a daughter company we call One Block Size Capital. And we as a group genuinely believe that the next generation of financial assets will run on distributed ledger technology. And what does that mean? It means that we believe that in the foreseeable future, all assets will be digital. And this is why we have decided to start a custody venture, because we have been looking into custody and we've seen what everybody has seen, that there are billions of US dollars have been stolen over the last years. And this custody right now is the biggest roadblock for mass adoption of this new technology in the financial space. And why is that? Simply because there won't be any system switch as long as there's the opportunity, or as long as an investor fears to go into an environment where he can lose assets or she can lose assets within billions of dollars worth of assets within seconds. And this is simply put an unacceptable environment. And so we went out and thought about, okay, let's look at the custody space. Let's look at the custody market and let's see what we can do. To ease that transition period. And we've noticed, we've looked at the custody market, and this event is also just an expression of that. This market is incredibly complex. It's complex when we look at service provider, so many different kinds of service providers, but also if you look at technology in the beginning, in custody, everyone was speaking about hot and cold storage. We have long ago moved beyond that. Like now we're talking about whether, like put your HSM on the premise, have a virtual HSM, or multi-party computing was also named already today. So we are at a point where we might not even store keys anymore, but just generate keys in the moment that the transaction is executed. And obviously this very complex, very fragmented, immature market that we see right now will at one point in the future mature, and certain providers and certain technologies will become standards and occupy certain niche. So if you want to, in general, if you want to learn more about this market, and you're on this webinar, so I guess, I really want to recommend you this one website called www.digitalassetcustody.com, because there you can see over 100 custodians listed, and you will see how big the variance is when it comes to the technology deployed, and how different is the capability of different players to actually live up to compliance standards and to regulatory standards. However, looking back at the market, so at one side you have the problem that there's still, like many assets are stolen, which is not a good thing for investors or financial players to move into a market. And also you have this very fragmented, very complex market, which leaves financial institutions with that question, okay, which provider will make it, which provider will be there still in 5 years, but also which technology to invest to, And in the end, when will it happen? When will we see consolidation of the market so my decisions may get easier? And that creates a very uncertain environment for financial institutions. And this creates an emotional environment also at some decision makers to better make no decision at all than to make a wrong one. And this is exactly where DECUS Network comes in, because we take off this decision from the client, from the financial institutions. DECUS Network is a middle layer that enables the client or the financial institutions to work with this fragmented market without committing finally to a single player. How do we do that? So basically, very plainly put, we have one unified API. So you have a lot of different players that all have different APIs, and you either could now integrate one or the other one, or you just integrate us, DECUS, and you can access via our API, our network. And why should you do that? First of all, you have a much higher flexibility. So you can play around, you can access different services without committing finally to one. And also this avoids any kind of lock-in that you make a decision that you might later regret. Also, we increase security because with the custodians that we work, we are 100% convinced that these are the best on the market, because we've investigated them, we have been on the market, we know the market, and we will only work with custodians that we believe are top-notch of the market. And also we work on clearing settlement, so you have a funding gap, so you have your funds on a custodian, and you want to trade on an exchange, and you can use send funds manually, or you automate that. So what we try to make with DECUS is build a middle layer that makes it much easier for financial institutions to enter the digital asset class right now by taking away the pressure to make decisions that they might regret later. Obviously, this sounds very easy, but it's incredibly complex. So we have on the technical side, we have much challenges. The API standards are so different. We have to really be smart here to find an elegant solution in unifying them. Also, we see many different, two-center authentications or general authentication methods. So we also work on that to kind of find a way that it all fits in our system. And in the end, there is a crypto custody license, which still gives us a slight headache because we are not 100% sure, but we're still working on it. And exactly, just a few words, because I'm pretty sure in the audience there might be one other person that also thinks about setting up a blockchain startup and or going into crypto custody. And what I've learned in the last month in half a year is three most important things if you go into this industry, want to work with clients, is educate your clients, because there's a huge feeling of people do not understand the whole thing. And the second one is be practical, and the most important one, always be easy to understand, because that keeps you in touch with your clients. And I thank you very, very much for your attention. I think my time is soon over. And I would be glad if you're interested in what I said. Feel free to add me on LinkedIn. Feel free to shoot me a message. Yeah, thank you very much for your attention.